Hey everybody, it's Pete. How you doing today? Welcome to today's Stock Market Live. In today's Stock Market Live, we're going to cover a lot. This is a massive, massive week of trading for the stock market. If you missed last week's amazing volatility, which was pretty much a gift from heaven last week, I don't know any other way to say it. I think you're going to get a replay this week. So hopefully you learned from last week. We got a bunch of stuff to talk about. We got a big list of earnings this week. We got the Fed coming out this week. We have the GDP numbers coming out this week, which actually takes me into a book. I'm actually going to introduce to you a book that I gave to everybody on my floor in New York City. It's a book on economic indicators and how to read them. There's a ton of stuff going on this week that you really need to know. And it's kind of fun to know it as well, too. You kind of put the pieces together, say the Fed's doing this or this number comes out, and how does that interpret price action, that kind of thing? How does that lead to certain type of price action? So we're going to get into that today as well. We got a bunch of stuff. I got a big list of stocks we're going to take a look at. Hopefully you got a couple of the trades that we took last week. Obviously, some of the windows that we're looking at right now are in that more 5 to 10 day window as opposed to the longer term move, especially on the bullish side of things. Netflix after earnings was pretty fun to trade last week. We have one stock that's reporting earnings this week that is really interesting because the last quarter, they did not have a good quarter. The stock split, and it was ugly as far as one quarter to the next. Now, it's going to be really interesting whether or not that stock is going to be able to recover from that. I actually don't think they're going to. So it's going to be interesting because they're kind of floating just above that $100 level. And it's a company that a company we've all bought something from this week probably. And we're going to see how that unfolds. So we got a bunch of stuff to talk about. I'm really jazzed up for this week. If you're new to the channel, what we like to do is we like to talk about what we're going to trade tomorrow and next week and going into the future as opposed to what happened last week. So buckle up. We got a lot of stuff to talk about today. Big tech earnings, oil earnings, GDP, Fed announcement, you name it, we got it this week. I am really jazzed up for trading. So stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today. I really, really appreciate it. First, I want to start out with the book that I was talking about. This book, you can see here, this is the one that I gave to everybody on my trading floor in New York City. It's a really, really good breakdown. I'll actually put it up there one more time for you. You can see the author's name right here. You want to know what's going on. You don't want to turn yourself into an economist, but you do want to have an idea. If somebody says something's coming out, you want to have an idea of what that means and what it should mean for future price action. So definitely something to pick up on. Let's hop right into it. I want to get right into sector rotation. All right, that's the very first thing that I want to talk about. Obviously, earnings is really big this week, but this is what I want to talk about. We're actually going to focus a little bit today on consumer cyclicals and financial. So I want to be clear. Again, we get a lot of questions about whether, what I'm actually trading personally. And I'm really looking for a big move in the financial stocks. We had amazing earnings. I'm going to give you a little bit of a breakdown right now on which stocks are in my game plan, which ones I'm actively trading, which ones I'm waiting for a pause, and then which ones that I'm looking for a new big move to the upside. I do want to point out one stock, and this is really a bigger trade that it was up 45% in 5 days after the stock was actually up a monster amount. Last year, it came down with the rest of the market. So what the stock has actually done now, after that really big move to the upside, it's pulled back a little bit, and it's got a little bit of support levels under there. So I just want to start out showing you what that stock right out of the gate right now, which is this guy right here. Okay, AFRM. Let me zoom this out. It doesn't look like anything significant, right? However, if you look at these 5 days right here, the stock was up 44.36%, maybe even a little bit more, just over these 5 days, and now it's pulled back a little bit. So I want to be clear of what I'm looking for in this idea right now. The stock has actually rocketed higher for just 5 days, basically from 20 to 30. Now, again, that might not seem like a huge dollar amount, but the percentage gain and the volume. So remember what we talked about. The volume is actually how much money spent by the smart money to create those charts that we see in the first place. So what I'm looking for as the stock has now pulled back on pretty good volume yesterday, I'm looking for it to actually test Friday's low. So it's up a little bit this morning. So I'm actually looking for it to pull back, test Friday's low, and then I'm looking to start a new position. So let's actually map that out. We kind of did this last week in Netflix as well. So you can actually see this big level where it stopped. Let me actually kind of zoom that out. So this is where stocks held support, broke down resistance, and found it again. So obviously this $30 level is a big deal. So what we're looking for on the next trade is between 30 and 48. That's actually where I'm mapping the trade out now. So we're looking at roughly an $18 potential profit target in AFRM. So if we know our upside profit potential and we know we're not day trading the stock, we're looking for this for a little bit longer term move. If $18 is our ultimate target, that means we know our risk now at this point. Now, the smart thing to do, because it just pulled back and it's at that monster level, we're going to call this what we call a two-step trade. So above $30 would be my first entry on the trade. So if it pushes down and tests Friday's low and they hold that support, that's actually encouraging because that means the buyers defended that price level again. So I just want to give you that again. So here's where we push down to on Friday. You can see we're actually open a little bit. If we don't push down, that's actually even more bullish. But what I'm looking for is it to open up and then get up towards that 30 level. So we're looking for 30 to 38. I'm not getting involved. I want to be clear about this. I'm not getting involved in a swing trade until it closes above $30. So with that $30 to $48 level and an $18 target, that means that I have roughly for a 3-to-1 3-to-1 risk reward. That means I can have up to $6 risk on the trade. So knowing that $6 risk, that means now we know the amount of shares we should go for because the distance between the entry and the stop loss will tell you how many shares to get. But I want to be clear about this because it's a two-step trade. I'm waiting for it to close above 30, get above that level for my first entry. Then I'm going to wait for it to push and pause before my second entry, ultimately looking for that $48 target. Now, I want to be clear about this, and this is a big part of mapping out. Again, I got everything on my secret document right here. You have to script it out because if this stock opens higher and continues to push down, then I'm leaving it alone. And I think that's a big challenge that a lot of people have is that they have their plan. They get all excited about their stock, the best stocks to buy now. And they're like, these are the ones I want to buy, but they don't perform the way you want to and you buy them anyway. And that's kind of like breaking the script. So be clear, over 30 is what I'm looking for. Again, these are all for educational purposes. It's up to you to make the final decision. But that's the plan that I'm looking for in AFRM right now. If it opens higher and pushes down and does not follow through, I'm just going to leave it alone. So what am I going to trade besides that? So let's actually head on back over into the sector rotation. And we said we're going to look at financials today and we're going to look at consumer cyclicals. But what we need to do first is really get a grip on what's going on in the market this week. Because remember, one of the biggest things that we talk about, and hopefully you're a regular viewer of the channel, if you are, if you aren't yet, and if I earn it, if you could please do me a favor, make sure you hit that subscribe button. We always have updates. We always look forward to the new ideas we're looking for. It's never going backwards because I want to have you understand how to game plan, build out that list of stocks. You have the confidence to say, no, I really thought about this and I'm going to accept risk because the idea is a pretty solid one. So going into this week, there is a maelstrom of activity. We said the Fed, the GDP numbers, and let's actually just go over those earnings. So I want to give you the list of earnings of stocks that are reporting this week, at least the big ones that I'm going to be keeping an eye on. So obviously, Apple is reporting this week. It's reporting on the 28th. You can see that over here, and actually has had a pretty nice run into that level. We also have Microsoft reporting earnings this week. Microsoft having a hard time getting above this level. Again, you can see that pretty clearly. It keeps stalling right there. Meta Platforms. Can Meta actually come back and rebound from BAM and BAM, like two different earnings reports? This one looked pretty good, but it was really more that they were low expectations that they beat. And now we're actually kind of hovering right over here around that 170 level. That's going to be an interesting one. Google, again, stuck in a trading range, very similar to what Tesla did. So Tesla was in the middle of nowhere and earnings came back out. So we're looking for Google to do the same thing, which obviously this is after the stock split. Chevron and ExxonMobil later in the week. They always report the same day. We also have Ford, but the big dog that I want to talk about that we promised to discuss right now is Amazon. I got to tell you, Amazon's last quarter was not good. You got that big red box on the bottom where it was actually a negative quarter. It's going to be super interesting. Right now, it's around 123 and change. It's actually up about $1 from Friday. This is going to be one that I'm going to be really, really focused on. It would not shock me if they did the same thing as last quarter. We can actually see over here what last quarter was right here. We had this big gap down and we have not been able to recover since then. We're kind of hanging out near the top of that level. So Amazon is on the 28th after the market closes. So what is the 20th? I believe that's Thursday, if I'm not mistaken. Yeah, Thursday is Amazon. So that's the big list of stocks I'm going to be focusing on for the week. But I want to now go forward a little bit, and I want to give you a little bit of a visual on, oh, actually, one stock reported this morning, Newmont. I just want to get that in here for you right now. You can see some pretty heavy volume coming in the last couple of weeks. You can see there's still clearly order flow, and the stock is actually down right now. They actually missed 46, missed by 15 cents. Revenue beat 3.6 billion by 20 million. So that's what we're looking at in NEM. If you understand short selling, that might be something you want to consider in that stock today. This is the big question right now: is recession, right? We had a long conversation about this and whether or not the market, the economy, not the market, the economy is actually in a recession right now. And just the straight up numbers, it says 2 consecutive GDP reports. Bam, you're in a recession, which we are right now. So on the 28th, let me put that back up on the screen again so you can see that. You know what? I'll actually post this link in the chat here if you want. You can actually keep an eye on that right there. So that's the big thing right now. Now, a lot of people, I want to say this politely, a lot of people were saying that inflation peaked last time. Now, that's just bad trader talk. And I'm going to tell you why. You know, raise your hand if you've ever picked a top or picked a bottom, and we all know that's not a good trade, right? So last time the GDP numbers were actually still higher, and people were saying it peaked. How in the world do you know it peaked if it was a higher number? That literally said it did not peak. So basically, people were guessing. So if you want to be really smart on Wall Street, you want to really be in charge of your portfolio, don't guess. Let the data tell you if it's actually peaked. So what we're looking for on Thursday to actually see whether or not we have a lower reading. Now, this article and this guy here is saying that it does not mean recession. Well, we're already in a recession. I don't know what he's talking. We're already in a recession because we did have 2 consecutive quarters. That's going to be another big thing coming out on Thursday. Actually, Thursday is action-packed. There's a ton of stuff going on Thursday. So anyway, let's get back over here into the rotation. We're going to first take a look at consumer cyclical. Now, again, I want to teach you something right now that is a core foundation of anybody who's involved in the stock market that's really critical to understand. It's the quality of the idea. There's really no other way to put it. When you're buying and selling stocks, the real risk in the idea is the quality of the idea and how many pieces to the puzzle can you put together. So I'm going to put this up on the screen. I'm going to give you a little heads up. Everybody says you put it up there too quick. I'm going to put this up on the screen so you can take a screenshot of it, and we'll start there. Okay. So this is the stock market power pyramid as part of one of the courses that we teach. So the bottom of the power pyramid here, let me actually come up on the screen here. The bottom part of the pyramid is what we call the big 3. And you can actually see John here at the beginning. He's always talking about the big 3. That's what we're talking about here, the big 3. The big 3 is the Dow, the NASDAQ, and the S&P 500. Now, what I want you to visualize here, I'm kind of leaning into why this week is so important and how to have much, much higher conviction levels while you're trading this week. It really comes down to how much of the market is on your side. If you're looking to trade an individual stock, do you have the market on your side? Do you have the sector on your side? Do you have that group of stocks on your side? And then obviously have that one stock that you're looking for that you know you have your minimum viable criteria to put a trade on. So for those of you that are a little struggling in the stock market right now, you're like, no, I want to keep my full-time job. I just want to make some money on the side. This is what we're talking about to keep it simple. First thing you do is look and see what's going on in the market. Can you look at the market right now and say, definitely buying pressure, definitely selling pressure, definitely doing nothing? So that's the bottom of the power pyramid, right? So if we're taking a look at that, that's what we're trying to figure out right here, but we use these 3. So if we hop on over to the market itself and we take a look, that means we're going to look at the SPY, the NASDAQ, and the S&P 500. So we have long-term from January, basically, we have a bearish move to the downside and we have a bullish move to the upside. So heavier pressure is to the downside, short-term move is to the upside. And we can do the same thing in the NASDAQ and the same thing in the Dow. They're all pretty much doing the same thing. So that's the bottom of the power pyramid. Now we work our way up one level, right? So remember, I just want to keep reminding you what we're doing right now. Trading stocks can be infinitely easier if you have a process, if you have a system of putting these pieces together. So that's the first piece. Before you look to buy anything, is the market obvious? Now we're going to take it up one level from there, and we're going to go into the sectors. We're going to get a feel for whether or not the sectors are doing. So we're looking at this, the stock market power pyramid, and first the market, and then we're going to go over to our buddy FinViz over here, and you're going to click on this little tab here, which is groups. and you want to get a feel for what are the sectors doing. So if the market itself is rallying in that short-term period, you want to line up what is happening. So over the last week, that's why we're going to look at consumer cyclicals, and we're going to take a look at financials this week. They've both been pretty strong and had good earnings. So now we worked our way up from the market into the individual sectors. So from those individual sectors, and we find this is doing one thing, we find a group of stocks doing the same thing, then we're going to look at the groups within the sector. So just to give you an idea of what we mean by sector and then group. So if you could imagine the technology sector, obviously we all can, right? We just talked about Apple and all those kind of things. But then there's one level deeper than that broad sector, which is, let's say, semiconductor stocks. So we'll look at AMD or NVIDIA or Qualcomm, those kind of stocks, right? Or Micron. So you go up one level deeper. So what we're going to do now is we're going to go from technology into individual stocks within that group. So if we pull that list up, and I want to make sure I give you the full rundown on this. Where do we have it? It's right over here. And we're going to work our way here. Okay, so there's the sector ETFs that you want to have. Let me see. You have that list right there. But then you want to go into the sector stocks. So right now we're about to look at consumer cyclical. So you need to have this list of consumer cyclical stocks. Now you might say to yourself, wow, that's a big list of stocks. How the heck am I going to watch all those stocks? Well, you're not. That's the point. This is a part of having the process. We're not looking at all the stocks. We just determined what the market's doing for the last week. Then we determined which groups of stocks were trading in sync with the market. So we're working our way up that power pyramid. So again, I want to put this on the screen for you one more time, just so you can take a snapshot of it, which is this guy right here. So we looked at what the market was doing. We looked at what the sector was doing. And now we're looking at individual groups within that sector. So if we bring in some consumer cyclical stocks and we put those stocks on the screen right here, we're now going to start to take a look at some of the Etsy. Okay, now here's the point that I want to get across. This is very, very important. We're working our way up the list. We're building that argument. Remember, every time before you hit buy, you want to say, how many reasons do I have for choosing to accept risk right now? If I'm going to buy this stock and I'm going to hold it for the next week, the next month, the next 6 months, whatever it happens to be, you have to say how many reasons. The number one reason, or the minimum criteria that we could be looking at as active traders, is to use that 50-period simple moving average on the daily chart. I don't use exponential. I don't use all that fancy stuff. I just keep it as simple as possible. If you know Dow theory, there's always 3 different kinds of trends in place at the same time. So us as swing traders and looking to hold those positions a little bit longer, the 50-period moving average is the minimum criteria. So now we're filtering consumer cyclical down even more to we only want to take a look at stocks that are above that 50-period moving average, which now tells us they're in sync with the market, that sector is strong, and now we're going a little bit deeper into the technicals to say, okay, the price action in these individual stocks inside of that sector that's strong with the market is something we should at least take a look at and put into our watch list. So we basically just whittled down hundreds of stocks in consumer cyclical to the list of stocks that I'm going to give you that I'm going to watch now going forward this week. So it's kind of simple. Once you have a process, what's the market doing? What sector is doing the same as the market? And now let me go find some strong stocks that match those two guys. Okay, so again, I'll just pull this up on the screen because it's really important. We've just now worked our way up, and now we're going to take a look at some stock-specific ideas. So all the ideas we're going to look at, they're going to be above this 50-period moving average, and they're going to show some recent order flow. So Etsy at the top of the list, Chewy, which had a pretty big upgrade over here, still holding this trading range. And again, you can see it's above right here. Dick's Sporting Goods. I guess everybody's getting out of the house and looking for something to do, getting back into some sporting equipment. LVS is a really interesting one. This is obviously not a get out of the house, but it is consumer cyclical stuff where you have discretionary income. Let me actually touch on that for 1 second, because there's consumer discretionary, and there is, which is also known as consumer cyclical, and there's consumer defensive. Consumer defensive is stuff that you need no matter what. It's like you go into Walmart, you go into Costco, like all those kind of things, and Band-Aids and stuff like that. That's consumer defensive. It's defensive because no matter what's going on in the economy, you're going to end up going out and buying those kind of things. So you got Pepsi, Coke, Walmart, Costco, those kind of Procter & Gamble. You need Band-Aids, Johnson & Johnson. You need baby powder, that kind of stuff. So that's what happens when those stocks tend to go up. When inflation is getting higher and the economy is not doing so hot, those are the kind of ones that are usually kind of like the default. If we are coming out and we're starting to see the other side, people are starting to get a little bit more into the consumer discretionary side of things, which is stuff when you have discretionary income. So if you could think of discretionary income as you have a little bit extra money, you might be starting to do a little bit extra stuff, which is why we're now talking about Las Vegas Sands, LVS, Etsy. Maybe you're buying some extra stuff online. So I just want to keep giving you the list of ideas. Okay. So LVS, what else do we have in here? Penn National Gaming. So again, you can see a lot of these are now coming off of this trading range and rising. Okay. We also have Wynn. We also have the big dog that we talked about last week, and pretty much anything related to electric vehicle cars. So if the economy is starting to improve, if that's what we see unfolding this week after all the economic data, these kinds of stocks, electric vehicle stocks, you have NIO. Well, NIO and XPV maybe have a little bit different bent to it because of the government regulations that they have over there. But let's not forget about Ford. Ford is reporting earnings this week as well. General Motors, Tesla's not the only company in the United States that has these electric vehicles. So starting to give you a little bit of an idea. So consumer cyclical at the top of that list. Again, I just want to show you the list. So again, we're not guessing. There's no reason to guess. You follow the smart money. And I want to get that across as well. If you are confused from the stock market, if you're finding the stock market a little bit overwhelming, narrow what you're doing down and just say, I want to follow the people that have deep pockets and a lot of research. They have bundles of cash and full teams of research. Let me see where it's obvious, and then I'm just going to find a spot to hop on board in that direction. And that all starts with what we talked about today, which is reading the market first and then going into sector rotation. The other one that we're going to take a look at right now is financial stocks. And just to give you an idea of how strong financial stocks are, well, first let's go over to the ETFs. You want to track what's going on in the ETFs. You can see it's the first sign of them possibly breaking down. Then we actually have the banking ETF itself, which is a little bit stronger. So we have the broader based financials, which is the XLF ETF. So again, we're going up that power pyramid. And then we have the KBE, which is the bank ETF. So we're just getting an idea of which groups are strong. So now we're going to go up the power pyramid just a little bit more and take a look at some financial stocks that I'm going to be looking at. Some of them are way beyond the optimal entry and they're going to be in the watch list. Some of them are kind of hanging out now after good earnings. And I want to give you that list. And again, it's going to meet that minimum criteria, which is the 50-period moving average. So let's hop on over to the charts and we'll take a look at some of those guys. So the one that exploded, I think, in the biggest way, percentage maybe not monstrous, but let me actually get that off of there so you can see the size of the move. Goldman Sachs, you can see earnings were over here. So again, above the 50-period moving average. Now it's stuck on a little bit of resistance here, so there's no shock that it traded into a bearish U-turn, but you can see the group itself has some really strong buying pressure right now. So I'm going to go through a list of stocks. So again, you might want to watch this one more time to jot down this list, maybe go back and pause it on this spot. But now we're going to go from those consumer cyclical stocks I talked about before, which, by the way, home builder stocks, we haven't talked about those, have been really strong, and they had some big news last week. So let's just actually take a quick look at those. They're also consumer cyclical. You can see Lennar broke out, KB Homes broke out, PHM broke out. So these guys are getting a little bit of buying pressure. And now, you know what's super interesting as well right now is if you're reading anything about real estate right now and interest rates and the amount of houses and how hard is it to sell a house now compared to what it was 6 months ago, that's all doom and gloom headlines for them right now. And they all should be going down, and they're not. So what does that tell you about not paying attention to the headlines and being good? The better you are, you're not going to listen to how somebody else on television or anywhere else is telling you you should. And this is what's going to happen next. We're talking about ideas right now that are meeting the criteria. Again, the first part is order flow, which is understanding what's happening right now and if it's obvious. The second part is really where we make the money. The second part is tape reading, because if you put these two together, is it obvious and how do I know when it changed? So all the ideas we're talking about right now, they meet the criteria right now, and we can confidently look to enter into those trades as long as they're near what we call the optimal entry. That's the condition right now. If that condition changes, we either stop, we get out of the trades, and then we go look for other ideas. And I really think that's a part of trading and being involved in the stock market that a lot of people just maybe haven't learned yet. So if you could imagine running a business where you have to pay your employees, you have to pay the electric bill, buy inventory, that kind of stuff. If you have a business like my family did for years, when I grew up on Long Island, we had a deli. We had to buy the bologna, we had to buy the roast beef, we had to, buy the coffee and all those kind of things. That was the cost of doing business. And you were okay with paying those expenses as long as your business made money, right? Trading's the same way, and this is the way I teach it. You're trading losses, even if they were great ideas, you're just simply paying the expenses to run your trading business. So when you kind of shift away from a loss is bad, or a loss means I was wrong, and you get away from that, you're like, well, I didn't buy roast beef, and I wasn't wrong when I bought roast beef. I had to buy that roast beef to sell the roast beef for a chance to make some money, right? Trading's the same way. When you understand that putting on a trade, which we talked about now, is building the best idea you can, you choose to pay that expense and take that risk because you think there's a good chance of making money. So if you take losses in the stock market, it doesn't mean you were wrong. It just means that particular idea didn't follow through. So it kind of reduces all the stress when you're trading, because you're not, I'm right, the market's wrong, or stocks stink and it doesn't work. It really comes down to when you shift what it means to take a loss and to say that's a business expense for me being in the stock market. It's not life or death anymore. It's actually kind of fun. You're like, okay, I'll just kick that one out and I'll go find another one, which is why we spend a lot of time over here on this, because we're just constantly looking for the flow of money, and we're constantly looking for what's the best idea right now. Some of those ideas work out great. Some of those ideas become a business expense. And at the end of the month, if we did what we were supposed to, and every day and every week, we're just following the flow of money in and out of good ideas, trading kind of becomes fun at that point, because we're never guessing anymore. We're just paying attention. So if you write anything down right now, is it obvious? And how do I know if it changed? Those are the two biggest things. Once you have those two things in place, trading's kind of fun, because it's really just, okay, it's still valid, let's hang on, or it changed, let's get out and go to a new idea. By the way, our boot camp actually starts today. If you want to learn about it, today's actually the last time you can get involved if you want to learn about this kind of stuff in a little bit more detail. So let's actually get into some more ideas. Now I'm going to shift over into the financial ideas. So if you can see here, financials are actually not near the top of the list, but they're having a pretty solid month and a pretty solid week last week. But I want to get into some of the ideas. We talked about Goldman Sachs already. I want to shift over now into Citigroup, which you can see, and I forgot who had mentioned it last week, but we do have a little bit of resistance here, right around this 55 level, maybe a little bit more over here. So we got basically from 52 and change, maybe a little bit of resistance up to 58, but then beyond 58, we're looking all the way up at 68. So if you remember what we talked about before in AFRM, I said that was a two-step trade. So I like Citigroup right now. Again, these are educational videos, but I'm telling you right now, I've been actively trading Citigroup quite a bit, actually, the last couple of months, and especially over the last week since earnings. I'm looking to establish a two-step trade in Citigroup, where I'm looking for it to first rally out of the pause that it's in right now, get beyond or up to that $55 level and pause, and then I'm going to look for that next level up towards 68. So you can actually see how the trade's mapping out right here. You got resistance here, and you got some selling here. So it's going to be first piece up to this level, get above this level, and then I'm going to look for another push up into there. So the other ideas that I'm looking at in the financial sector, specifically, the ones that have been leaning on it, and this is actually an interesting one because I haven't traded this one in a while, but again, you can see it meets the minimum criteria that we're looking for, and the stock's been beat up for a while, but you can see it's now above the 50-period moving average, and it's got some little bit of mojo right now. So the next level that the stock needs to get through is probably right up in this area, right around 90, which is another $9. But here's the thing, if it gets beyond 90, then we're looking all the way up here at 120. So we can't forget, this is what we're doing right now. We're tracking and following the flow up the power pyramid. So PayPal's an interesting one. SQ is an interesting one. Now, SQ is kind of still hovering right over here, and this is very heavily tied to digital currencies. So other ones that I want to keep an eye on, Morgan Stanley. And again, you can see that they all have traded now above this minimum criteria. Visa is reporting earnings this week. American Express is reporting earnings this week. Some of the other ones that I really, really like to trade, JP Morgan is another one in that list. And if we take a look at a regional bank, which is STT. So again, I can't stress strongly enough, this is what we're working on this week. We're working our way up the major pyramid. And as we start to work our way through that list, As long as the ideas are still valid and we're showing order flow, we'll maintain our positions. If we see order flow change, then we simply shift over into where another group of stocks are showing the best promise. Now, in a best case scenario, the market is also going up, which gives us a lot more conviction in these ideas. So I'm going to shift this all the way back to what we started at the beginning of the call, which is about understanding what's called trade expectation. So if we remember the power pyramid and we want the market on our side, we want the sector on our side, and we keep building that strong foundation underneath ideas, we have a lot more conviction, which means that we can hold those ideas a lot longer. Well, right now, the market is kind of bearish to sideways, so we don't really have the market on our side other than the last 5 days. It's an exciting start, and we got some big earnings this week, and we have the Fed, and we have the GDP announcement on Thursday to get an idea, the conversations around inflation. So that's a tornado of information this week. So what does that tell you? What does that tell us about the expectation for having massive conviction this week? There's a ton of stuff going on. For me this week, perfectly, you've already heard me say twice that I'm going to be working my positions. The trades are going to be two-step trades. We're also potentially reversing from a bearish move to the downside. But there's a lot of economic data that's going to give us some clarity this week and then tell us whether or not the next big move is going to be up or is the selling going to continue. So what does that mean, right? There's all that. You just confused the heck out of me, right? Here's what it means. There's a lot going on this week, a lot of uncertainty this week. So that means this week I'm going to be reducing personally. Again, these are educational videos, but I'm going to reduce my position size personally because of all the, I'm not going to say confusion as much as lack of clarity that we have right now that we're waiting to unfold this week. I will be looking to aggressively trade some of these stocks that we mentioned before that have earnings short term, because those short-term catalysts usually give a really good push over that 3 to 5 day window. And you can see that because we just talked about that in some of these financial stocks. You can see how strong they were coming out. So these are the kind of moves that I'm looking for after earnings this week. As the week unfolds, I'll be leaning a little bit more onto earnings specific stocks. And then after the Fed announcement, maybe even a little more aggressively on the list of financial stocks that I just gave you, because interest rates, pretty clear interest rates are going up again. Their margins expand. The margins mean that they can earn more money as those interest rates going up. So I'm going to be spending a lot of mental energy this week on financial stocks and earnings plays. As this week unfolds and we start to end the week down, order flow, which is the direction obvious, will get a little bit more clear. And then I can sink my teeth a little bit, maybe more into some swing trades on a little bit bigger picture. So this week, a little bit of uncertainty, a lot of earnings plays, looking at the financials, looking at the consumer cyclicals, and I'm just going to keep following the smart money as it rotates. I'm going to rotate with it. The point that I wanted to make before is in a great market, you can usually track that sector rotation and stick with that group for months. The market has had so much uncertainty this year. Sometimes the rotation happens day by day, which is why you need to do that or have that research that I do every day. So you're really tracking it and you're never guessing. There's no guessing. Just pay attention and you have a lot less stress when you're in the markets. All right. So we had a lot that we covered this week. You might want to watch this video one more time because we really mapped out the entire week and how I plan to trade it and which stocks. We also talked about the stock market power pyramid, which is a really big part of trading. And that affected how I plan to trade this week because of how much of the market I have on my side. So again, we like to talk about forward, not what happened behind us. And that's really the best way to trade because now you gain that confidence to say, I know what I'm looking at. Here's what I expect to have happen. If it happens, fantastic. If it doesn't happen, leave it alone and go find another idea. All right. I want to thank you so much for joining me here today. I really, really appreciate it. If you don't know, Monday, Wednesday, and Friday is when we do the live streams early in the morning. I really hope that you can join me. If I earned your attention today and if I did a good job, if you could please do me a favor, make sure you hit that subscribe button, give us a like on that thumbs up. And if you have any further questions, definitely click down below the video and leave a comment. I promise I'll get back to you as soon as possible. If you have any insights on anything we talked about today, leave that below the video as well. I'd love to hear from you. And if you want to learn about the boot camp, you can find that link in the description below the video. It actually starts today. Have an awesome day, everybody. Thank you so much for joining me. I really appreciate it. Hope I helped, and I hope you got a little good ideas this week. Take care now.